In the short run, it's quite clear that inflation is falling as opposed to rising in response to COVID-19, and even with all of the government efforts to try and address the problems of COVID-19. And so we can see that in the real-time economic data. We can see that in oil prices that are greatly lower than where they were several months ago. And we know that classically, when economies suffer big economic shocks, you tend to get less inflation as opposed to more. And so in the short run, less inflation is a clear answer, and we can see that already happening. In fact, we think we'll be flirting between deflation and positive prices over the initial several months. However, the narrative may well change over the medium and longer run. And so we're aware that whereas some of those depressants fade with time, for instance, oil prices have already staged a partial rebound. And for that matter, we forecast that economies get a little bit less weak over the coming year. Many of the forces arguing for more inflation might well stick around. And so, for instance, central banks have printed a great deal of money. They are buying bonds and other assets with them. It's unlikely that money gets destroyed anytime soon. So there's more money potentially sloshing around. We also know that on the fiscal side, governments are delivering a lot of stimulus. I focus less on the stimulus, more on the fact that they're generating a lot of public debt, and that public debt is unlikely to go away anytime soon. And there can be a temptation to inflate away a bit of that debt. In the end, I'm skeptical that truly problematic inflation will arise. It never really works to try and inflate away your debt in any kind of grand scale. We know from a decade ago that quantitative easing didn't have to create more inflation. And so additional inflation is far from guaranteed, but there's a risk of a bit more inflation out there. And indeed, there is one factor that wasn't relevant during the financial crisis of a decade ago, and that's the fact that we're seeing more onshoring of supply chains. Companies and governments recognizing the value of producing some things at home, and that's generally more expensive, and that can be inflationary as well. So there's a risk of a bit more inflation over the long run, and that's not a great thing for investors. It's quite unwelcome on the fixed income side, and it's not an ideal scenario either for equity investors. And so a little bit of a headwind may present itself over time.